Cashflow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Welcome to Oregon Cashflow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. How's everybody doing today, or tonight, or this evening, wherever it is where you live? I'm back at the in-laws room, not because anything's going on at our house. I just had a meeting here, and it went right up until the time I was supposed to start this live stream. So, we're here, back in this place. Hopefully the internet connection holds out. It did well the last time. But, yeah, so that's where we're at. We are here talking about our wealth, and I'm here to answer your questions. So if you have any questions, lay them on me. Go ahead and say hi in the chat if you're there. Let me pull up and see what we've got here. Make sure everything is working correctly. One of the things I want to let you guys know about is we did start a Patreon, and I'm going to put that link here in the chat. So patreon.com/Oregon Cash Flow Pro. And at that link, there's 3 different tiers that you can sign up for. We did tier 1, it's just $1 to get in, and that gives you access to some of the general chat channels and one of the live voice channels, which allows you to call in, or we can get on there and you can actually do questions live here on our live streams in that. We have yet to test that out yet, but that is the idea behind that. We created that $1 minimum just because I wanted a little bit of a barrier so that we can basically keep trolls out. And it seems to work. It seems to be working pretty good. But it is a growing community there. Our tier 2 is our what did I call our tier 2? It's our cash flow community. Folks who want to get in and learn about and talk about other people who are doing dynamic banking and infinite banking. Maximizing their cash flow. It's kind of a little bit of a step up because I do live streams every day on the stock market and Tesla. And so we've got a lot of those folks who want to get into the general chat and the market chat and talk about that. So the next tier up is folks who really want to work on their finances. And then we've got our third tier, which is our mastermind group, cash flow mastermind group. And with that one, those are the people who are really focused on improving their finances, and you want to be around a smaller group of people who are committed to getting better on your financing, talking about investing. We've got a mastermind real estate channel for people that want to talk about real estate, wholesaling, fix and flips, Burr method, house hacking, whatever you want to talk about in there. We're there to help everybody out. That's the idea behind it. And we're hoping to get folks in there that are committed to that. So I'm expecting some folks in this chat that are in this live stream that are interested in doing better with your wealth to come join us in that tier 3. And it's only $50. That's $50 a month on that Patreon. It's a drop in the bucket compared to the value that you're going to get from hanging out and interacting with people that are committed to building their wealth just like you are. So join us there. I'm not seeing anything in the chat, so if anybody's there, feel free to say hi and just let me know that everything is working okay. I'm assuming that you guys can hear me because it says that my microphone's working. And I think you guys would probably tell me if my microphone's not working. But just to be sure, drop a note in the chat. Hit the like button. Let's see if we can get a few likes on the video. I'm going to pull it up on this end. And let's see. Okay, it does say that we're live. There we go. All right, we got a couple of likes in there. All right, Poker, how's it going? How you doing? Mic check is good, he says. Okay, good, good, good. And we're getting a few more viewers, so be sure to hit that like button. Let's YouTube know that we're live and people are getting some good information on the topics that we're talking about. So they'll suggest the video to other folks and we can get people in here and have some good conversations. So if any of you guys have lingering, burning questions, lay them on me and we can talk about it. Anything to do with finances, real estate, although I'm not a real estate investor yet. I'm learning a lot about it though. Poker says, good to see you on the live stream. On the live stream streets. Nice. So I've been staying pretty busy. We've had meeting after meeting after meeting for the last few days. But one of the challenges that I've encountered was our pump went out. Our well pump went out. And we haven't had water for the last week. So that's been fun. But we did get that fixed this morning. Mostly fixed. We still have to figure out where the leak is in one of our other systems, which kind of caused our thing to go out. Wilfred, how you doing, man? Good evening. But it was about, I think we spent about $2,200 just getting a new well pump, a new pressure tank, a new pressure switch, and a new control box. So that was a big hit to the finances. That'll hurt the cash flow. But luckily, we are in a position that we're able to handle that, keep on trucking. Part of the reason that I'm able to do that stuff is, we've been practicing dynamic banking for a while now, maximizing our cash flow, creating those savings, paying down debts, and using it to fund our infinite banking policies. So big relief there. And I know some of you guys have just started your infinite banking policy. Some of you are just looking into it. Maybe you're learning. Maybe you got some questions. I've been talking to folks about IULs all week, and the good things that we have there. I know we went over the Allianz IUL a bit last week and the week before that. That one's got a lot of excitement around it right now. But what are you guys interested in hearing? I want to hear from you guys. I can talk for hours and hours. But I want to be discussing things that you guys want to hear. So, what can we talk about? Any burning questions on your minds? Otherwise, I will look up the most recent questions that have come in. The most recent questions that have come in on our videos. And I'll find something. To answer. Because I've had some really good questions come in. That we can go over. But I'd rather address questions from those here on the live stream to begin with. So while I get to these, I will keep an eye on the chat. And we will see what's going on. And if I don't see any questions, I'm going to assume everybody is already wealthy beyond their wildest dreams. Nothing has gone wrong with your plans. And you're just on here to look at my smiling face and listen to whatever comes out of my mouth. Does that sound accurate? All right, let's see here. Checking out the comments. What questions do we have? Oh, I've got a good one. This one was not on one of the videos. I was working with somebody today. This isn't a question. This is just a story. I was working with somebody today. Another person who just signed up to be a life insurance agent. Not with me, but with a buddy. I don't even know if it was a buddy, but it was somebody who works for a multi-level marketing organization. And the way there's some life insurance companies out there that operate like multi-level marketing organizations, and they just recruit, recruit, recruit. Their goal is to build a downline that they get to make money off of. And what happens is they just end up churning through agents. They'll hire somebody, and it'll be somebody that either they've already bought a policy through them, or they're planning on getting a policy through them, or they hire them and then that person buys a policy, because part of the pitch is you want to own the policy so that you know what you're doing, right? Own the product you sell. Demi, hey, how's it going? Good life to everybody on the stream. Yes. So what they do is they'll recruit people, and those people will buy a policy. They'll buy an index universal life policy, typically through something like Transamerica, and then they don't actually get any of that commission from that policy. Their upline does. So they write that policy through their upline. And then they start to sell these policies, and they get like 30% commission based on whatever the target premium is. And if anybody's been listening to my stream for a while, or you've watched my videos, you know what target premium is, right? Target premium is how the agent's commissions are determined. So they get about 30%. Their upline probably gets another 30% or so, maybe less. I don't know, because I haven't actually been in one of those companies. But then that person's upline gets a cut, and the person above them gets a cut, and it just goes up. That's how the multi-level marketing organizations work. Well, if this person, first of all, his policy wasn't designed very well. It was decent in that it used a level B, or an option B death benefit, which is an increasing one. That's like the very bare minimum you can do to create a policy that will grow in cash value to the benefit of the owner. Okay, but there's quite a bit more you can do. And this didn't do any of that. So it paid a good commission, but none of that went to the agent. So it went to the uplines and all those folks. So then that person's expected to go sell to their friends and family, and then a lot of times the agents go out of business after that because they can't really find anybody else to sell these to. And so they just churn through agents. They just keep getting more and more agents, and they sell their friends and family and move on. That's how these end up working. Well, I let this person know. I was like, if you just come and sign up with the place that I work with, you basically can get like 90% of the commission right off the bat. You don't need 30%. Carlos, good evening. How's it going? So you could basically get 90% of the target commission. Now, with the way that the policy is designed, it's actually going to be at 90%, you'll be less than what you would get at 30% with selling that bad designed policy, but you're going to it'll only be a little bit less, and you're going to actually design these policies for the benefit of the client. And so I got to show him what that policy looked like and compare it to what his policy was designed as, and it just blew his mind. So anyways, I love doing that. I love talking to folks and showing them what's possible with these things, especially other agents, because they are not being trained to design these policies for your benefit. So I really enjoy doing that. And if any of you guys have ever had a meeting with me, you could probably see it. My face really lights up as I'm going through this, and I'm showing you exactly how it works and how it should be designed. And anyways, I have fun with that. All right, Poker says, if Oregon Cash Flow Pro had to pick a product to go with first, would you go with an Index Universal Life product or whole life insurance, and why? And then follows it up with, how might you set them up? Okay, good question. Actually, I really like that question. So whether I would go with Index Universal Life or a whole life product depends on who is getting the insurance. It also depends on what they want to do with it, but it more depends on who. Because if it's a young person, if it's somebody, a juvenile, or even somebody, say, under 30, I would probably go with an Index Universal Life policy first, for a couple of reasons. I'm assuming that they don't have a lot of income, or in the case of a juvenile, they don't really have any income, but you typically fund those policies at a much lower level. And if we're funding the policies at a much lower level, say $1,200 to $3,600 a year, or $100 to $300 a month, you're not going to get much cash value growth out of a whole life policy because the underlying cost of insurance is a lot higher than the underlying cost of insurance on an index universal life product. Now, you also get the added benefit that max funding an index universal life product has greater potential for growth. It doesn't have the guarantees that come with the whole life insurance, but it does have greater potential because it's tied to an index in the stock market. Well, what works best when we're tied to an index in the stock market? Time. Time to go through the ups and the downs and to end up with a good average return. That may not happen in 1 or 2 years, or may not happen even in 10 years. Depends on what the stock market's doing. So, a young person has 30 or 40 or 50 or 60 years that they can build up this policy and get that growth above that low cost of insurance. And before they get into an older age where the cost of insurance ends up going up and up and up, and by that time you need to have already earned your gains in the policy in order to make it worthwhile to continue the policy. So it's a high possibility with a good designed index universal life product, and so for a younger person, I would start out with that. Now, if they have the ability to fund it at a little higher level, and say it's somebody who has an emergency fund that they've built up, that it's storing it in a bank or a checking account or a savings account or a money market account or a CD, something that doesn't pay very much in interest. Or they have a capital expense account. Maybe they own a home and they're saving for a new roof, or they set money aside for any other repairs that may come up. The whole life product is a great product to serve as that savings asset in place of an emergency fund or a capital expense account. You also can contribute a lot more to a whole life product, and when you're contributing larger amounts and more so than what you might put into a retirement account, it's nice to have the guarantees that come along with the whole life insurance. It's a lot easier to get above the basic costs of the insurance when you're funding it at a much higher level. And so the whole life insurance works better when we're doing very large, high cash value premiums. And so in that case, if somebody needs a product to put those funds in, or you need to shore up your financial pyramid with a nice solid base, that whole life insurance product can serve as a very solid base on that financial pyramid. So that's when I would go with a whole life insurance first, at least to cover that base. And after that base is covered, depending on how old that person is, depending on how much risk they're willing to take on, it's not a whole lot of risk with an index universal life product, but it does present some risks compared to whole life insurance. If you want to have the opportunity for more growth within your policy, that's when you would go with the index universal life product. Whole life product is great if you're looking to utilize the cash value inside of it to get your growth outside the policy. So hopefully that answered that question well, but that is how I would determine which one to go with first, index universal life or whole life. Now, how might I set them up? We try to set them up to minimize the cost of insurance. We always want to try to minimize the costs. And that is how we maximize the cash value and the growth within the policy. With an index universal life product, everything that you can fund above that cost of insurance is going to be growing with whatever index you're tied to. Poker says, thanks, good breakdown. You're welcome. You're welcome. So everything is going to be tied to the growth in the index that you choose. So we want to minimize those insurance costs by utilizing an option B death benefit. As we get later on in life, it's always about the net amount at risk, the NAR, the net amount at risk, when it comes to what the costs are for an index universal life policy. And the net amount at risk is the difference between your cash value and your death benefit. Whatever that difference is the net amount at risk, and that's what your cost of insurance is based off of. So we always want to try and minimize that. There's different ways that we can minimize it throughout the life of a policy. depending on if you're still contributing to it and at what levels you're contributing to it. So best to stay in contact with your agent as your policy moves along in that case, so that we set it up properly, but then we also maintain it properly. And I am planning to put together a checklist so that you guys can easily see, okay, this is the policy I've got. What are the things I need to pay attention to and at what time? So like a whole life policy, 7 years is the magic number for a whole life policy. Once you've had the policy for over 7 years, we can look at doing other things with it. We can turn it into a reduced paid up if you no longer want to make premium payments. We can reduce the amount of premiums that we're paying on it, or we may even be forced to reduce the amount of premiums that we're paying on it. With an index universal life policy, when you get to typically age 75, you have the opportunity to trigger an overloan protection rider. That's kind of a last ditch pull the ripcord scenario, but sometimes it's necessary to do in order to protect what you've built up. Okay. Other points to consider might be anytime you want to adjust the costs within a policy, or maybe you need more insurance at some point. We can look at doing more insurance, or maybe you need to be re-rated on a policy. If you didn't get the health rating that you wanted, after a year, we can go back to the company and try and get re-rated and see if we can get a better health rating, which will increase your cash value growth in the long run. So a lot of different things to consider. I'm going to be putting together a checklist on that. I don't know how quickly. Because we've definitely been keeping very busy. But that's the plan. Now, that was mostly setting up the index universal life. And when it comes to setting up a whole life insurance policy, I'm a big fan of the 90-10 design if it's available from the carrier. Companies like Guardian, Mass Mutual, 10% being a base premium, 90% being all paid up additions that you can put in, which ends up giving you about really close to 90% cash value in the first year. That's the type of designs that I like, and it fits most people's financial goals the best, because it leads to the higher cash growth in the short term and in the long term. Not all companies allow us to design it that way, though. Company like Penn Mutual, we can do an 80-20 design is about the best that we can do. Still a good product. It has really good growth after that first year. You just don't get 90% cash value available in the first year. You get more closer to 80% available in the first year. But it has really good dividends, and that company's been around a long time, and it's a good one. A lot of people like it for doing infinite banking. So depending on the carrier, we gotta design them a little bit differently. So hopefully that answered that question well as far as how we'd set it up. If there's anything I missed, let me know, and we'll circle back around to that. But great questions. Anybody else have a question? I think while we're waiting for somebody else to answer a question, I think it's a good time to give out a prize to everybody that's here. We've got 10 people on, and what do you know, between numbers 1 and 10, there's 10 numbers. So I would like to give out a prize. You guys haven't been very good at collecting your prizes. People have been winning them, but you haven't been emailing me and connecting with me to make sure that I can get you your prize, that I can reimburse you for it if you paid for it. There's been a number of folks that have won, contacted me, and then not followed through to get your prize. I really want to give this stuff away to you guys. I really do. I'm gonna write it off as a business expense, so you don't have to worry about it. You don't have to buy a policy from me, so you don't have to feel obligated in any capacity to get this stuff. But I'm giving away one of 2 books that are in the description, or anything on my Teespring account. All right, yes, I see the numbers coming in. So pick a number between 1 and 10, put it in the comment. Number between 1 and 10, put it in the comment, and in about 30 seconds, I'm going to pull up a random number generator, and we will see who wins. And I know that some of the folks who have won stuff, they really like the stuff that they got. They got a nice hoodie. That was like a $50 prize that one was worth. I'm paying for the shipping and handling. I'm paying for the product. Or at least I'm reimbursing you for it. So the way that it works is if you win, you send me an email, and if you don't find the links to it, you can send me an email, ask for the links. I'll send you the links to the books and to the marketplace, so you can decide what to pick for a prize. Otherwise, you can just go right to the marketplace or right to the books, click on the links, buy them. That way you can have it shipped right to your door. Doesn't have to go to me first. And then you send me the receipt. You email me the receipt, and I will get you paid. And if you have a PayPal account, I can reimburse you immediately with that. A lot of different ways to do that. So that's how you collect your prize. Hopefully the reason you guys haven't been doing it is because that's too complicated. I don't want it to be complicated. If we need to do something else to get you your prize, let me know. We'll get you the prize. But that's the easy way to do it. That's the easy way, and it gets shipped right to your door, so you don't have to wait for it for very long. So, all right, we've got a bunch of numbers in there. Anybody else? This is your last chance. I'm going to pull up the random number generator, and we're going to pick a winner. Here we go. Random number generator. We're going to go, 1 through 10. All right, I'm going to hold this up to the camera so everybody can see it, and then we're going to push the button. So, here we go. And last chance to get a number in. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And the winner is number 1. Oh, Joseph, you got that in just in the nick of time. But it wasn't your number. Poker's our winner. Poker's our winner. All right. Oh, Ben got a number in. Well, we got 2 5s. Didn't matter. We ended up with a number 1. Number 1 was the winner. Although if I get enough comments in here, we'll do a second winner. We'll do a second winner too. So I know Poker's won a couple of times, and he still hasn't decided what to get yet. Poker's congratulating himself. That's funny. Okay, so we did get another question there. Poker, you know how to claim your prize. I know you got a couple in there. Just chuck this up, add it to the stack of prizes you got to claim. Thanks. And I did see another question come up. So it's funny, the random number generator gave you the win, and you're the one asking all the questions. So I appreciate that. Appreciate that. If anybody else has questions, put them in the comments. We will get them answered. You'll get the sweatshirt once you get the IUL finalized. Okay, cool. Okay, so regarding IULs, he says, can you talk about the difference between policies that have growing death benefits versus the ones that only need to be ahead by 5%? Not exactly sure what you mean there. Let me read this again. Regarding IULs, can you talk about the difference between policies that have growing death benefits versus the ones that only need to be ahead by 5%? I don't know that I can. I don't know what policies only need to be ahead by 5%. So we have there's a couple of different ways that we can design IULs. One of those is, there's a couple of different ways we can determine our MEC limit and how to stay in our MEC limit and contribute to the policies a lot so that we can generate cash value. And then we have different types of death benefits. So we have an option A death benefit, which is a level death benefit. And then we have an option B death benefit, which is an increasing death benefit. Some carriers offer an option C death benefit, which is an increasing one with a return of premium that goes with it. Or maybe it's a level one with a return of premium. I don't deal with that one too much because it doesn't lead to cash value growth like we're looking for. And so anything that doesn't lead to that, I don't spend much time on it, even learning about it because it's just a waste of time. I don't sell any policies. I don't design any policies that are not designed to maximize your cash value growth. Every once in a while, I may do it where we're going for a death benefit, but that option C is like somewhere in the middle that it doesn't do any good. It doesn't do any good for anybody I've worked with. So I don't know what the 5% one is that you're referring to. So maybe you can clarify in the comments what you mean by the ones that need to be ahead by 5%. So the two different ways that we determine the growing death benefit is you've got your guideline annual premiums and you have cash value assessment test. So those are the two different tests that we can assess when trying to determine how much you can put in each year and whether the policy will become a modified endowment contract. The cash value assessment test is one that's typically used when somebody only wants to pay in for about 5 years. And you want to maximize paying in for 5 years, but you also want cash value growth and death benefit together. So cash value growth and death benefit. In the long run, that policy is going to have a higher death benefit for the life of the policy, which means your costs are going to be increased the whole time, which means your cash value is going to be reduced. Your death benefit will be higher, but your cash value growth will be reduced in the long run. So typically, I don't design those policies. There's also another reason why I don't design the policies with a cash value assessment test. Your overloan protection rider typically does not apply when you're selling a policy that is designed with that test. The overloan protection rider is one of the key riders that I like to have just in case things go wrong. Just in case you want to get out of this policy, you want to get all the cash out of the policy, but you don't want to have tax consequences. That overloan protection rider is there. When you turn 75 years old, you got the opportunity that you can shut that policy down, take all your cash value out of it, and it's not going to lapse. They're not going to have tax consequences on the gains in the policy. Okay? That's the idea behind the overloan protection rider or the loan protection rider. So, always want to have that in there, in my opinion. In order to do that, you have to go by the guideline annual premium test. That means you're going to have a set amount that you can contribute. There's a maximum amount that you can contribute each year, and we go right to that limit. If you go over that limit, you become a modified endowment contract. Your policy becomes a modified endowment contract, and then you get all kinds of tax consequences that you don't want. So we can go right up to that limit though, not have an issue. You can't go over it accidentally. The insurance companies won't let you. They will tell you if you're trying to deposit too much money and it will go into a MEC, they will tell you that. They'll let you pull money out. Nothing to worry about as far as that goes. But it's that guideline annual premium or guideline level premium that we do in order to maximize the cash flow and reduce the insurance costs as much as possible. So that's basically, hopefully that answered your question. You did say between growing death benefit and then some other kind. So we have level death benefits and we have growing death benefits. We call them increasing death benefits. And if we do the increasing death benefit option, it allows us to start off with a much lower death benefit, a lower amount overall, and it's just going to increase along with the cash value. A level death benefit is going to start off at a level. It's going to start off at a certain level death benefit. Your cash value is going to be down here, and eventually they're going to meet. With the other one, your death benefit starts off down here, and it grows along with the cash value. So in this case, if you can see what my hands are doing, the cost of the insurance is not up here. The cost of the insurance is down here, which is what allows us to get a lot more cash value growth right away. All right, let's see what you guys are saying here. There are IULs that you have to continue to apply for more insurance every few years. The 5% insurance is what you pay for beyond your growing cash value. Oh, that's the one you've been talking to me about that somebody else is offering. Gotcha. I have not seen that design, so I can't speak to that design. But from my understanding of what you told me, you start off at a certain death benefit and you increase it every once in a while, maybe every year, maybe every couple of years, in order to contribute more money to the policy. Now, you can do that with any of the insurance policies that you get. You can typically increase the amount of insurance that you have and also then your ability to contribute to it. But you're going to have to go through underwriting, and you're going to have to get approved to be able to do that. So, without knowing any different, I would think that you would have to do the same with that policy, unless somehow they're maybe designing some convertible term insurance to go along with it, and you're somehow able to convert some insurance every few years and add to it. Not sure how that would work though. So this may be something that I have not stumbled across the advantages or how to do it. But yeah, good question. Good question. And I don't get stumped too often, but I can only speak to my experience. And I'll tell you guys if I don't know something, I'll definitely tell you. Along with making an educated guess, of course. Let's see. Ben says, what is the best IUL company in your opinion? So it depends on what your needs are. I like two companies. There's two companies that rise to the top of my recommendation list. Okay. There's three up there, but the third one is not quite so close as the other two. At the very top, when it comes to potential growth, is Allianz. Allianz offers the most potential growth. It gives me, the agent, the ability to design it with lower costs, lower commissions than any of the other IUL companies out there, which means not only does it give me the opportunity to minimize the commission, which gives you the ability to maximize each of those dollars above that as you put it in, but it also has some really great index options, and it has really good bonuses to go with it. All of those add up to massive growth potential in that policy. Now, the one thing it's lacking is the reason I like the number 2 company on my list is National Life is the number 2 company on my list, and that's because they have 4 living benefit riders that are very comprehensive in allowing you to be able to access the full death benefit prior to passing away if you meet certain requirements, which are needs-based. So like if you can't perform certain functions, if you end up in a coma or you have a heart attack or a stroke or something that is typically a high-cost event or something that hurts your ability to earn income, you'll have access to the full death benefit. They have 4 living benefit riders to help do that, and they don't charge you anything for that. Now, Allianz has 2, or maybe even 1. They might have just switched it down to 1. But for the most part, I like National Life because of that, and I like Allianz for the growth. National Life can't touch Allianz when it comes to the growth when you consider the index options that they have and the bonuses. Now, if it's just straight head-to-head, it competes very well with it. But because of the other things that you can do with the Allianz product, when it comes to growth, the Allianz product beats out National Life, hands down, when it comes to potential growth. Now, sometimes those positions change because cap levels change and index options change. National Life had a higher cap rate before, which put it into a better growth position. Right now, their cap rate's not the best. It's not the best. Hopefully, it'll come back up, in which case I can start recommending them not just for the living benefit riders, but also for the potential growth. But they sell a ton of policies, and I don't see pressure on them to do that in the near future. So hopefully I get pleasantly surprised and they do that. In the meantime, I'm selling a lot of Allianz because that's where the growth is at. So Poker says, that's it. Increasing death benefit. You have to reapply every few years. No, with the increasing death benefit I'm talking about, you don't have to apply every few years. It increases along with the cash value as your cash value goes up. What you're talking about does increase the death benefit, but it's not just the option B death benefit. It's something else, and I'm not sure what it is. So if you ever get an illustration from those folks that shows you what they're talking about, send it over to me. I'll be glad to analyze it and report back. Because I'm intrigued. I'm always interested in knowing what everybody else is doing, because I don't fool myself into thinking I know everything. I'm always trying to learn more, and there's typically a reason people are doing something else, and I like to figure out what that reason is, and if it does what we're trying to do, which is meet the financial needs of our clients and do it in a way that maximizes their cash flow. So as long as it can do that, I'm certainly open to adopting anybody else's practices that are out there. So Poker says to ask me about Allianz. Yeah, that's the Allianz. Allianz is definitely one of the tops when it comes to potential cash value growth. That was the policy I got on my daughter, and I think I showed you guys last week or the week before the policy that we started. That one's now funded, so I look forward to borrowing against it as soon as I can. And once I do that, I will do a video on it. I'll do a video on, it'll be kind of an in-depth video on how I designed the policy, what the growth looks like, and how quickly you can access your funds, because that's like the number one thing for me. Every time I start a new policy with a new company, I try and figure out how quickly do I have access to that money, because I want to be able to tell you guys, based on my experience, how quickly you can get access to that money when you start a policy. Typically, it's about within 10 days. Every other company I've started, it's been about 10 days, because there's a 10-day free look period where you can back out of these. Once that 10-day free look period's up, they'll let you take loans out of it. So I'm hopeful that'll be the case with the Allianz product, but I don't know from experience yet. I will be letting you know shortly. So, what else do we have? Any other questions out there? Let's double check. Have you guys been hitting that like button? How are we doing? How are we doing on those? Hey, we got 5 likes. All right, that's a good start. We've had 9, 10, 12 viewers. So be sure to hit that like button on your way in or your way out. It does help us out. It doesn't cost you anything. It's free and it's easy. And it does help out the channel. So I do this every week. Every Wednesday we do an hour live stream. At least an hour. I think we did 3 hours last week because there was so many questions. It was just great. I can feel my voice is getting a little scratchy tonight though. So let me see if there's any good questions that I can tackle for you folks. That's why I don't want to filter. Let's see. Somebody asked in one of my videos, in the case of IUL, assuming it's max funded, can we take out a loan after 2 years? Will surrender charges apply for taking a loan? And he did realize that cash value might be less in the second year. So to answer that question, yeah, if you have a max funded policy, you can absolutely take out a loan after 2 years, and that's including with National Life or any other carrier that I'm aware of. National Life is the only one that I'm aware of that will not let you take a loan in the first year. I'm sure they're not the only one, but they are one of them that you can't take a loan within the first year against your cash value. Most of them other ones I'm aware of, you can take a loan out within the first year. And surrender charges do not apply for taking a loan. Loans are available. The surrender charges only apply if you actually withdraw money from your policy. So if you take it out of the policy or if you close the policy down. And in that case, surrender charges apply. Now, Allianz does offer the ability to avoid surrender charges with a liquidity rider They call it the Enhanced Liquidity Rider. It costs a little bit, so it reduces your overall returns. So I typically don't apply it. We don't put it in our policies. We're designed for max cash value unless you think you need access to all of that money in the first year. After the first year, you'll hardly notice any surrender charges when we're max funding these policies. So if you can get by the first year without worrying about it, I wouldn't pay extra for the Enhanced Liquidity Rider. If you need, or if you think there's a chance you might need it, go ahead and use the Enhanced Liquidity Rider. You don't have to worry about surrender charges. You can borrow the full accumulated cash value in your policy. You have access to all of that to borrow against within the first year. So, good question. And hopefully you guys get some value out of that. Let's see. Oh, Alpha says there's 11 likes. Well, it's not showing me 11 on my side. Thanks for that update. Let me take a look and see. Ah, you guys hit a bunch of likes. Now it does show 11 likes. So thank you. You guys are awesome. You guys added those likes in a hurry. Yeah, 12 now. 12 now. Just in time. Any advice for a new small business? Yeah, what type of small business? Let's see. Home inspection services. Ah, awesome. Advice financially, advice for maybe how to grow your business. Where are you struggling? Or maybe you're not struggling, but you're looking at maybe trying to expand something. Give me a little bit of idea, because there's all kinds of directions we can go as far as just blanket advice. Definitely best to try and narrow it down a little bit. But in general, for home inspection services, if you haven't done it already, I would just go to the offices of every real estate agent in town. You go talk to them, tell them. You can talk to the principal broker at the office. Might be a little different now during the pandemic because people are probably working from home mostly, but you offer, most of those offices will have team meetings once a week, every couple weeks, once a month. You just started, you want to expand and keep the cash flow going. Okay, so this is a cheap way to get going. You just go visit the principal brokers and you say, hey, I have a service. I would love to talk to your office about it and to your agents about it. Do you have a meeting that maybe I can show up and I can just tell everybody about it? I'm willing to bring food. And you just bring in a box of bagels, or you bring in a mix of muffins and donuts and whatever you want to bring in. Maybe it's a lunchtime meeting and you could just bring in some subs. Bring in food. Everybody loves free food. It's one way to get them to sit and listen to you. And they'll be quiet because their mouths are full of food. So, so that is a great way to get in contact with agents. You get in front of them. They get to meet you. They get to tell you kind of what they expect. I would have a sample inspection. I know when I did mostly real estate, so I'm still a licensed principal broker for real estate, and I did not like a lot of inspections that I got out there. I didn't like the reports. A report needs to be easy to read, and it kind of tells a story. So I liked, my favorite reports were the ones that started at like when you walk in the house, and it just goes through room to room. Just like you're walking through the house, it's going to go through what's needed. Pictures are right there next to it. Don't include pictures all in one place at the very end where people have to flip back and forth. Okay? You might include them again in a summary, but you want to have a quick summary. Put it right at the front of the report. A quick summary on what's needed. Have it highlighted so that it can't be missed. You don't want your clients, as a buyer's agent, you don't want your clients to accidentally miss something stuck in the middle of a report. Okay? As an agent, I need to be able to read the report and make sure my clients don't miss something that's stuck in the middle of a report, because that goes on me. I've got a fiduciary responsibility to make sure that we don't miss those things. So you're paying a good penny for your reporting software. All right. Well, do a report and take it to a couple of agents that you know and get their feedback. Don't just rely on the reporting. Don't just rely on what the software tells you. that it's good or not, find out what the agents actually like to see. And maybe you can tweak it to meet those needs too. So that was what I looked for. But go to those agents, go to those offices, see if you can meet during their meetings, bring them food, give them a sample of your report. That is the best thing to do, because what I always tried to do, not all the agents do this, but I always tried to give a couple of options to my clients. So if they needed to order a home inspection, I didn't just say, hey, choose just in time. He's great. I would say, okay, here's a couple of options. You got just in time, and this is what his report would look like. And then you also have best home inspection services, and this is what their reports look like. So take a look, call them up, see which one has a price that you like, and see what report format you end up liking. So I always give them a couple of options. So if you leave those reports with the agents, they can do the same thing. And oftentimes the client will just go with whoever they get in touch with first. So you got to make sure you're answering the phone. A lot of times they'll make a phone call to both of those people. Only one of them will answer. So great way to make sure that you get that thing going. Now, as far as cash flow, I mean, I can really get into cash flow for your company. You're likely not going to have steady income until you start getting a lot of clients and you start building your business and you start getting repeat business. So you're going to have some ups and downs. You're going to have to get through some low cash flow times, and you'll have times where you have higher cash flow. A great way to get through that is by utilizing dynamic banking principles. Having a line of credit available, whether it's personal or business. So hopefully you have that ability to acquire that. And if you want to talk some more about that, we can talk about that. I'm going to catch up on these chats now and see what was said. Alpha says, he was a general contractor and did that for a while. Best advice I can give you is become friends with all your local real estate agents. Yep, that's exactly it. Everything in business is built on relationships. Okay? So establishing those relationships is the key way to grow your business. You'll not only get advice, but you'll build relationships where you're going to be at the top of mind when they think of or when somebody asks them about those services that are needed. So you always want to be at the top of mind. By building those relationships, that'll put you there. Another way you can another way to do it beyond building the relationships is to establish yourself as an authority on the subject. So you may just be starting out, but there's a reason you got into it. What do you have to offer? What is your strength? A good way to get stuff out there is to start doing YouTube videos. YouTube is a great way to establish yourself as an authority. It gives people the opportunity to see you on video, see your personality, check out if they like you. And of course, you can use that opportunity to share your knowledge. And so things that you're not going to be able to do in just a few minutes when you might have a phone call with a client and they just want to know what your price is. So if they just want to know what your price is, a lot of people will just go with the lowest price out there. Okay? How do you get away from that and actually grow your business and not have to just fight over whoever's offering the lowest price? You do that by establishing yourself as an authority figure. You build those relationships, and you give the clients an opportunity to learn more about you beyond just what your price is. So when you give those agents your sample inspection report and they can show that to the client, that gives them something tangible and a reason why you can charge a little bit more than Joe Schmo down the block who's doing inspections for a couple $100. Okay, you could offer some types of guarantees that come along with your reports or your inspections. So I know some folks that do offer some type of warranty with their work. You could by doing the videos. If you do the videos, you can always share that link when you have a contact with a customer. So you can just have somebody have your wife or a sibling or a kid follow you around when you do an inspection one of these days, and then put it on YouTube. And then you can share that video. As you go through your inspection and you're taking notes, you can just make comments. Say what you're doing. Tell the camera what you're looking for, what you're doing. And then when you have a client that contacts you and you send them your invoice or whatever, you send them a quote, you can say, I'm going to include a video for you. Check it out. You'll be able to see what I do on a typical home. And I go through and I talk about what I'm looking for and things that you want to look for. And you know what? When you're going through and you're looking at house after house, you can kind of keep those things in mind. So anyways, there's some ideas for you. Hopefully those will help you out. Let's see. Alpha says, offer to do inspections up front. Paid only on close of sale. Win-win for both of you. Take pictures, quote your code book, and learn the phrases functions as intended or does not function as intended. Yep, those are good. Those are good. Always nice to be able to pay at closing. You're guaranteed to get paid at closing if you just get your invoice into escrow. Escrow will make sure you get paid, so you don't necessarily have to worry. The concern, if you do it that way, though, is that not every deal closes. So who's going to pay you? How are they going to pay you if it doesn't close, if they were relying on the close? So it can be a win-win, but you also got to realize there's some risk involved because not every deal does close. Let's see. Alpha, you always just use Adobe in Office and a digital camera. Nice, nice. Well, thanks for weighing in and helping us out there, Alpha, from your experience. I am not an experienced home inspector, but I am experienced on the realtor side. Robert Keller, thanks for the tip. Much appreciated. Much appreciated. I always like to see that come in. Makes me feel appreciated and that you like what I'm talking about. Speaking of, Robert's a part of our Patreon group. He's on our Tier 3. In fact, we have a few of you in our Tier 3. Alpha is one of our moderators, so thanks for joining us on the live stream. But Alpha moderates our Discord server. And Alpha, we started a channel in there. I haven't seen you in there. I didn't see you in there today, but I started a real estate channel in there for our mastermind group. So it looks like you've got some experience. Maybe you should check it out and see if there's anything you can input. ESO, how's it going? What are we doing? We are talking finances. This is our Wealth Care Wednesday live stream. Bring forth your questions on whatever topic you've got. We will do our best to answer them. But dynamic banking, infinite banking, maximizing your cash flow, questions about credit, questions about real estate. There's all kinds of topics that we can dig into, and we'll do our best to help you out and provide some value. Now, and we give away prizes, So those were great questions. I do think I will give away another prize because we've got a lot of folks on here who have not been on here before. My voice does not seem like it's going to last a whole lot longer. So let's give away another prize, and we'll probably try and wrap it up for the night. That way I can come back strong tomorrow, and we'll be ready next week as well. So if you're interested in winning a prize, we do a random number generator. Put a number between 1 and 10 in the comment section. Oh, have you heard? ESO says, Workhorse has been added to the GSA website. Just wanted you guys to know. Oh, interesting. I mean, I would think that they should. I got added to the GSA website. So it doesn't necessarily mean anything that it's been added to it. You just have to know what hoops to jump through so that you can do federal contracts. So I'm not sure. Hopefully it means something, but I wouldn't just assume it means anything. Anybody can apply to be a government service provider and get added to it. So, Alpha, you saw it. A man is considered wise until he opens his mouth, so I didn't say anything. Maybe true, but people got to know that you're there too, so that they can consider you wise. So at least say hi. Top Gun says your wife got her sweatshirt the other day. She's wearing it today. Nice, nice. Well, if she's up for showing it off, send me a picture. Send me a picture. ESO. Oh, but people like you will jump in tomorrow. Good point. Good point. There's definitely value in spreading that around if you're a workhorse stockholder. No need to tell people that it may not mean that they're getting the contract. All right, so put your numbers in there, number 1 through 10, put a guess in there. Remember, the prizes that I'm giving away are your choice of one of the 2 books that are in the description or anything that's in my Teespring marketplace. And the way to claim your prize is go to one of those links, buy the thing that you want, have it shipped to you, and then send me the receipt. You don't have to wait for it to be shipped, but send me the receipt and I will pay for the product and the shipping. And I reimburse you using PayPal. But that's the easiest way to do it. That way it gets mailed right to you. It doesn't have to go to me first. I don't have to contact you and get your address. It just makes everything go a lot smoother and easier. So, Joseph, nope, you're not too late. Go ahead and pick a number. Yeah, pick a number. Okay, looks like you did. Good, good. Top Gun says, but share what you know and have learned from others' benefit. I think that's in regards to joining in the conversation. Making sure to open your mouth. Okay, so, Joseph changed. Good, good. So we don't have that tied up. Carlos is in there. BDN's got a number. Doesn't look like anybody's doubled up. So good job. Good job. I'll give you a couple more seconds. Anybody else who wants in on this, go ahead and put your number in there, and we will do a random number. We're going to go 20 more seconds because there's a 20-second delay on this live stream. 20 more seconds, and we'll spin the wheel. Spin the wheel. So great questions. Love the varying topics on this. Love the varying topics. And hopefully we haven't had any issues with the feed cutting out. But I appreciate you all coming and joining me on this live stream. And hopefully we can continue to grow it. We got 14 viewers on there now. Still says 11 likes. I'm sure maybe there's some that hasn't added in there. But if you haven't hit the like button yet, be sure to hit the like button. And I'm going to put this up. I need to switch screen so I can see the camera and make sure I'm pushing the button in the right place. Here we go. Getting ready to spin the wheel. So 1 was our last winner. You can see it's still on there. And 5, 4, 3, 2, 1. Number 3. Number 3 is our winner. Who picked number 3? BDN. BDN ISD. I don't know what any of that stands for, but you are our winner. So, do you understand how to claim your prize? If you got any questions, put it in the chat. I definitely want to make sure you guys are claiming these prizes. Know that there is no purchase required. There is no purchase required. You get to take the prize. No strings attached. No strings attached. Yeah, you're welcome. Okay, good, good. So I look forward to hearing from you. Just let me know when you get in touch with me. What your screen name is, of course. Hopefully nobody tries to impersonate you first, since your screen name doesn't give anything away as to who you actually are. And hopefully I'm not putting any ideas in anybody's head either. So congratulations. Thank you all for joining us. You sent me an email last week. Oh, okay, cool. Well, you'll have to remind me. Did you win last week? The person who won last week did not claim their prize. I mean, they tried to, but they didn't actually follow through and get their prize or send me a receipt. So I'm still waiting. I'm still waiting on the last couple weeks, actually. Bond. James Bond. Too funny. All right. Well, thank you all for joining us today. If you guys have any questions, I'm about to end this live stream, but I will play you out with the music. Poker says, "Enjoy your prize. The best gift is the one-on-one time with me. His insight is worth a future policy or two." Thanks, Poker. I appreciate that. Appreciate that shout out of confidence. I will end with this though. Join us in our Patreon group. You guys all have a lot to contribute, I'm sure. But I'm definitely looking for more folks to join our mastermind. And if you're in this live stream, odds are that you want to do better as far as your future wealth is concerned, your finances are concerned, and that is the ideal place for it. It's only $50 a month. Not a whole lot with the amount of value that we can bring to each other and the motivation that brings when you're hanging out and talking with other folks that are interested in doing the same thing. A lot of value there. I am still planning on. We haven't done anything special in there yet, but what I want to do is plan some get-togethers in that group so that we have something similar to this, but it might be a set time where we have a specific mastermind focus. So I've got to figure out how I'm going to make that look, but I hope to see you all in there soon. You can find the link to the Patreon hopefully in the comment section of this video. I don't remember if I put it in this one though, but it is in the description of many of the other videos, and I'll try and get it into this one. But actually, you know what? I can type it in here in the comment. So just to finish us up here, the link is patreon.com/Oregon Cash Flow Pro. So go to that link, sign up to be in our Patreon. I invite you to join our mastermind group where we are going to be focused on helping everybody grow their wealth. And it's an easier place to kind of do one-on-one things, not just one-on-one, but like we can answer specific questions and dig more in depth. But it also has voice channels, so we can actually talk to each other on there as well. So it's just like getting together in person. Pretty cool. Alpha Omega says, "Busy doing nothing. Internet slang dictionary." BDN ISD. ESO says, "Just a stock guy. Bonds up 0.015%. Future up 3 digits. Long as there's no stupid news, and as long as sentiment of Joe winning, we will see market pop." All right, we're going to look for that tomorrow. I ended up having some wins today, which was nice. I kind of scaled back and I focused on doing some option spreads, some credit spreads, and I was able to get in and out of those, made a little bit of money. Feeling pretty good about how things went today. So look forward to talking with you guys all later. Thanks for joining us, and I'm going to play you guys out with some music, and we will see you next time. Not that one, that one. Take care, everybody.